So one of you guys just sent me an email asking about Illumin stock, asking about whether Illumin is still cheap or not, even after the recent run-up. Now, I don't know if you've been following Illumin stock, but this is what has happened to it since the beginning of this year. So this stock has already gone up about 32%. But honestly, as I will show you today, I think we may still have a lot of upside here left. So I wouldn't be surprised at all if we saw this stock reaching, for example, $6. So yes, with that, I am indeed saying that we may still have a 150% upside from where this stock is trading now, okay? And again, as always, nothing in this video is investment advice. Now, let's remember what Illumin does. Illumin is a marketing platform that helps advertisers to better understand, to better visualize the consumer's journey. Now, if you are really interested in Illumin's investment thesis, I recommend you watch this video here. It's a little bit boring, but if you are really interested in Illumin, I think it's worth it because in this video, you will understand what their platform does. But anyway, Illumin operates in the marketing sector, offering technology to advertisers so they can do a better job. Now, Illumin's market cap stands at $85 million, as we see here. But as Illumin has about $33 million in cash, this means that Illumin's enterprise value stands at only $52 million. The thing is that while at the end of the day you are paying only about $50 million for this company, as we see here, over the last 12 months, Illumin delivered $94.3 million on revenue. This means that Illumin is trading at a multiple of only 0.55 times enterprise value to sales. And I know that a lot of you don't like to evaluate companies using revenue. After all, it's not revenue what matters. What matters for us is profitability, is what is left, right? What matters for us is how much cash a company generates. But I decided to use revenue to evaluate this stock because this is a microcap company listed on the TSX Venture. So we are dealing with venture capital here. And a lot of the companies in this business stage are just not profitable yet. So that's why I decided to use revenue to think about Illumin's valuation instead of profit. But anyway, for me, a multiple of only 0.6 times enterprise value to sales is quite low for Illumin's business. And let me explain you why I think so. But I think Illumin's business deserves a higher multiple because, first, Illumin's business is very scalable, okay? Illumin also has recurring revenue, and the recurring part of its revenue has been growing. Besides, Illumin has a good gross margin at 50%, and I expect this margin will expand as Illumin's self-service division continues to grow because this part of its business is much more scalable and probably has also bigger margins. So as this part of the business grows, I think we'll see this margin expanding. But this is just my guess, okay? And again, nothing in this video is investment advice. Now, as we see here, Illumin is not profitable. Over the last 12 months, they've delivered a net loss of $4.3 million. But here's how I think about it. First, a net loss of $4 million is not nice to see. I don't like to see that. It's still a loss. But on the other hand, a loss of 4 million is not disastrous, right? Actually, a loss of 4 million is not that big, right? Especially considering Illumin's revenue of $95 million. Moreover, though Illumin has delivered a net loss of 4 million, this company actually generated cash, which is far the most important. Either way, here's what I think will happen. Illumin's business has a considerable operating leverage. So I believe that as revenue continues to grow, there will come a point in which all this new revenue will start to flow directly to the bottom line as profit. So I think we'll start to see Illumin getting closer and closer to break even. Actually, I wouldn't be surprised at all if Illumin became profitable soon. Anyway, I've said all that because I think that a multiple of only 0.6 times enterprise value to sales is a really low multiple for this company. Now let's compare Illumin to other companies in the same sector, in the same area. So here we have a comparison between Illumin, PubMatic, a stock about which I've talked in this video here, okay, Magnite, and the Trade Desk. Now, though these companies operate in the marketing segment, in the marketing area, they are actually pretty different, both in terms of business model and size. For example, the Trade Desk has an enterprise value of 60 billion with a B, while Illumin Holdings has an enterprise value of only 55 million. But even so, I'm comparing these companies so we can get a better sense of what multiples are possible for Illumin, so we can understand where Illumin is in terms of valuation. So as we see here, Illumin is the company trading at the lowest multiple between all these companies here. So while Illumin is trading at only 0.6 times enterprise value to sales, PubMatic is trading at 2 times, while Magnite is trading at 3.6 times. And ultimately, the Trade Desk trades at 26 times enterprise value to sales. And then you might say, of course, after all, look at the Trade Desk's gross margin at 81%. Now, look at Illumin's gross margin at 48%. Magnite, for example, has a gross margin of 60%. And of course, this lower margin here helps to push down Illumin's valuation. On the other hand, that's not the most important. For example, look at Illumin's net margin of minus 4.3%. After all, Illumin has delivered a loss over the last 12 months, right? Now, while Illumin's net margin is this, look at PubMatic's net margin at 6%, or at Magnite's at 2.6%, but especially look at the Trade Desk's net margin at 13.3%. So of course Illumin is trading at a lower multiple, right? The question is, what will happen with this multiple if Illumin starts expanding its gross margin? And what if we see Illumin becoming profitable? Then I think we could see this multiple expanding a lot. So maybe we could see Illumin trading at 2 times enterprise value to sales. That's far from being unimaginable, right? Or maybe at 3 times. Now, what would happen to Illumin stock if this company traded not at 2 times, not at 3 times, but at 1.5 times? So from 0.6 to 1.5, that's a change of 150%. So that's why I said in the beginning of this video that I wouldn't be surprised at all if the stock reached a price of $6. The thing is that this may be a low bet because these companies' multiples here, with the exception of the Trade Desk, are also very depressed. The sector, the marketing sector as a whole, is very depressed. For example, here we have the history of these companies' enterprise value to sales multiple. But as we can see here, excluding the trade desk, let me exclude it here, excluding the trade desk, the valuation of these companies has been destroyed over the past few years. Actually, since the beginning of 2021, when we were in the pandemic bubble, right? The thing is that while the last years have not been favorable for small cap companies, leading to depressed valuations, I think this can change. So there may come a time when the scenario starts to change, so interest rates begin to drop, and the market starts to become more optimistic about small caps, about the tech sector, and about the marketing sector. And then I don't think you will see companies with this kind of cash flow margin trading at 3.6 enterprise value to sales. And again, as I've already told you, I think that Illumin's operating cash flow margin will expand. So another reason for this multiple to adjust and for Illumin stock price to go up. So in summary, that's why I believe that Illumin stock is still cheap, even after the recent run-up. Now, what do I think will happen? In the beginning of this video, I've said that I wouldn't be surprised if Illumin reached $6. The thing is that we may see much more upside at the end of the day, because in the small cap world, valuations are already depressed, but Illumin's valuation is even more depressed. So we may see very big moves when the market sentiment starts to turn. So answering that question, whether Illumin stock is still cheap, well, honestly, I believe so. However, I've already bought my shares, and at the moment, I'm not planning to buy more. Instead, I'm focusing on other names. Anyway, again, this is not investment advice, okay? And well, that's it for today, and see you next time.